What's up, guys? So the purpose of this particular video is to talk about probabilities. When we say probabilities in the market, sometimes we really do not understand it in depth. Probabilities means there's a higher chance of something happening over another. And in the market, how probability play in your favor is a higher chance of, if you have an edge, so your edge just explains or resonates or justifies the higher probability of something happening over another over a series of trades. So with that knowledge, with that base knowledge, you cannot really pick and choose what is going to happen next because you can really never know what is going to happen next in the market. Your goal in this market is to execute. When you execute, the probability will present itself. That means basically you wait, you see your edge, you execute the trade, the market will unveil what is going to happen next. You do not know. And you really do not know, you really do not need to know to be able to make profits in the market. So I learned a new lesson this week on Euro USD and US oil. I'm going to be showing you what happened on the chart. But before that, I just want to let you know that in the markets, if you have an edge, the first thing you need to have is an edge. Because if you don't have an edge, you are just, will I say, gambling because you don't really know what is really you're really doing. So what you should focus on first is to have an edge. And when you have an edge, a tested and trusted edge. When you have an edge, you don't need to start strategy hopping. No, make sure you back test that edge and go back 5 6 7 years, see how it has performed in the past, see the probabilities, see if you have a 60% win rate on that edge. Then you can start working on your psychology to make sure you are able to optimize that edge to the full potential. So let me show you some of the things that happened, some of the things I've learned this particular week on my trades. So on Euro USD, I was buying this week. You can see here, everything is still playing. I was buying this week. So I think I took my first trade here on Tuesday. Yeah. So this is supposed to be here, but because of this particular setup that I moved it here to just get some more space. So I was buying this week because obviously we are trending upwards. We have a lot of momentum. We had price correction. Then we had this big. Let me use my bar replay too so you can get where I'm trying to explain. So we had this big push in the market. So I was expecting price to come to the 5061 extension for me to continue to buy further. So when price arrived there, did the first rejection, then my setup, like I've always shown, I needed a supply zone created or a demand zone created for me to execute. So a double bottom formation basically. So which we had around here. So you see how the double bottom has played out around here. So I set a buy stop around this week level here, this week, and price literally tapped in there. And where's the next? Okay, price literally tapped in there with this week. And so what I did that I feel I was wrong, because I know Euro USD. Euro USD usually most of the time it comes to the last week to find liquidity. So I was trying to set my stop loss parameter, but I was looking at Euro USD like, how will I give Euro USD a 122 or 120 pips stop loss? Like I didn't think that Euro USD could actually give me 200 pips in a 1 to 2 or 300 pips in a 1 to 3. That was my thought process. Like the 100 pips was just too much for me, so I was a bit stingy with my stop loss. So you can see price just came, did exactly what I know, stopped me out this week, and look at what price did. Price did a 1 to 3. Imagine Euro USD did 400 pips within the week. It's been a long time I've seen Euro USD made that performance. But the basics of this video is: one, do not be shy with your stop loss. Two, you do not know what is going to happen next, so you need to let the probabilities play. Then what now happened after that? I was, because of Euro USD, I didn't take a US oil sell position. Same thing, price was selling, had a correction, double top, so demand supply zone, sold. So I just draw the parameters here because it's just one account and I don't over leverage. What every professional trader ensures, because you don't know what's going to happen next, you do not over leverage. So my risk management is always on par. So I just set the parameters there just to see how my strategy performed, and it did a 1 to 3. So Euro USD stopped me out, and I was thinking the next day, like, come on, this stopped me out. Then US oil now presented another setup, which is this setup here. So we had a double top formation, price came down here. So I sold. I just took out these parameters, but I sold here, looking for a 1 to 3 based off what this particular one has done, and price came and stopped me out on a break even. So I didn't lose any money in this particular trade, but the basics is you do not know what is going to happen next. So I thought, because this has performed well, so we may have more sellers coming to the market and sell further. And I didn't take the Euro USD trade because as it stopped me out, I just felt US oil did perform better yesterday, so we could do better again today. I didn't take this trade. This particular setup here, I just drew it. I didn't take it. So I took this and I took this. So instead of having just one trade with a 1 to 3, I took a loss and I took a break even. So that basically explains what probability means. You do not need to know what's going to happen next. Things will happen in the market. Your goal is to prioritize execution. Execute. Once your edge comes in play, execute. Do not think about it. So Matt Douglas said something. He said, when your trade presents itself, or when your edge presents yourself, do not think. Execute. Execution brings profit. Executions bring improvement. Executions bring losses, and which is part of the game. And you need to start seeing losses as money you pay to see if an edge is going to work, like business expenses. So you do not think, you execute. You think before the trade presents itself, but once the trade presents itself, which is your edge, you execute. So yeah, that's the basics of this video. You need to understand probabilities. You don't need to be picking and choosing. You also need to set your stop loss properly, especially for pairs like EU. You need to set your stop loss properly because liquidity grabs always happens in those particular major pairs. So because we have lots of people trying to trade it. So yeah, that's the basics of the video. I hope you're able to grab 1 or 2 things. Don't forget to like, comment, share, and turn on your notification bells, because if you don't turn your notification bells, you don't get to get these gems, and you probably get to get late after you have maybe encountered some failures in the market. I'm here to provide service. So don't forget to like, comment, share, like I've said in the past, and I'll see you guys in the next video. Bye for now.